Well, good afternoon. Thank you all for joining. I'm Adam Sporn from BitGo. We're very excited to host today's webinar with BitcoinIRA. Before we begin, we wanted to give the required disclaimer for the webinar. So we are providing information here today for informational purposes only. We're not acting as legal or financial advisors or investment professionals. Any personal opinion should not be construed or relied upon as financial advice, and we're not here to recommend any cryptocurrencies. Housekeeping for interactions with panelists, we'll be taking questions throughout the webinar, so please submit your questions in the chat box as we go along. Hopefully we'll have some time at the end for questions. With all that out of the way, it'd be great for our speakers if they can introduce themselves. Why don't we start with Rick?
Hey, Adam, and good afternoon, everyone. My name is Rick Synrod, and I'm responsible for the operations at BitcoinIRA, the first and most trusted platform to provide access to digital assets within client self-directed IRAs. And I look forward to our time together.
Maryann.
Hi, Maryann Bullion. I am General Counsel and Chief Compliance Officer at both BitcoinIRA and Digital Trust, and we are very much looking forward to talking about security with you all.
Good afternoon, everyone. Steve Scott here, Director of Sales at BitGo. I spent the last 20 years in traditional finance working across the globe. The last 18 years at Morgan Stanley in prime brokerage and securities lending. Before that, I worked in hedge funds and broker-dealers. BitGo is a qualified digital custodian, servicing over 1,500 institutional clients globally, regulated across 4 jurisdictions globally. BitGo offers hot and cold wallets, trading, staking, DeFi, and NFT wallets to start.
Great, thanks for those introductions. I run BitGo's prime brokerage and U.S. institutional sales teams. I joined BitGo last year after 20 years in traditional finance, focused on prime brokerage and securities lending at Morgan Stanley, BNY Mellon, and State Street, and joined BitGo last year to help institutions safely store, trade, and finance their digital asset strategies. We think it's a very important time in the industry to discuss how investors can safely allocate to digital assets. Obviously, the industry's had its growing pains over the last year, and is learning some key takeaways, lessons around risk management. Post FTX, we're operating in a different landscape. Investors are asking a lot more questions, including the ever-changing regulatory environment, and wanting to understand the best practices. Client conversations are very focused around finding solutions that will allow them to safely allocate and scale their digital asset strategies. And so our hope is with today's session, with all the investors on the call, that get more details on our partnership with BitcoinIRA and how we help clients protect their assets and scale their strategies. So with that, Rick, what do investors need to know about crypto security? Can you discuss the custody of digital assets and why it's important to BitcoinIRA and your clients?
Yeah, why it's important to BitcoinIRA and our clients. So I think it's important to frame a bit of business context for my answer here. We operate within a very specific segment of the market, which is self-directed IRAs. An important distinction here is that we are not an exchange, we're not a broker, we're not a liquidity provider, or generally a platform for which clients intend to make quick access of, like your typical retail exchange where you deposit fiat, buy, sell crypto, and then withdraw those assets. Your traditional crypto on and off ramps. Instead, when people choose BitcoinIRA, and thus the custodial partners we align ourselves with, they're not thinking short term, tomorrow, next week, next month. They're really entrusting their assets with us potentially for 5, 10, or more years from now. And therefore, they're relying on us and our partners to maintain the safety and security of their assets for the long term. So I wanted to start with that, as I think it's important to set who we are and who we serve as the backdrop to how we think about digital asset security and what matters to us in our clients. So for clients that choose to invest in digital assets with Bitcoin on BitcoinIRA's platform, institutional grade qualified custodianship of those digital assets is sort of foundational to the needed assurances that those assets will be available to them when they become a retirement age or need or have financial needs to access those assets. To unpack that a little bit further, when assessing digital asset custodial partners or sub-custodians, we do so through the lens of our clients and what they expect in order to preserve, not preserve from a market volatility perspective, but preserve their assets for access long term. The most important things that we think about at BitcoinIRA are, do our partners meet the exceptionally high standards when it comes to risk management? That might include foregoing access to esoteric assets that present their own risks or rug potential. That includes robust operational and security, both physical and cyber security controls. Are they regulated? Are they audited? Do they provide the attestations to their control environments? And is there insurance against loss, theft, mismanagement, and the like? So those things are really foundational things that are most important to us as we align ourselves to top brands in our ecosystem, like BitGo. There are also purely operational things that matter to us on behalf of our clients. Things like wallet management, cold storage, post-trade settlement processes, asset support. And probably not least as important is a knowledgeable team that can help navigate the complexities of our ecosystem. Adam, you mentioned the regulatory environment and its ever evolving or not evolving, lack of clarity or clarity, whatever you want to say it. All of these things are behind the scenes to clients, but it matters. It matters to us, and it matters to who we choose to do partner or to partner with for custody of and security of digital assets.
That's great. Thanks, Rick. And then from a BitGo perspective, Steve, how have the events of the past year and proposed rules around qualified custody affected BitGo's business and the client base?
Yeah, so 2022, no doubt, was a really difficult year for crypto. There's a lot of lessons learned through this process. There was a lot of negative news flow, volatility and pricing. And I think the key takeaway from the industry is things had to change. So the question here is how has this been affecting clients? How has this been affecting us? I think firstly, the industry has seen this push towards segregation of duties, something that's very simple in the TradFi world. And if the segregation of duties had been between exchanges doing their jobs and custodians doing their jobs and not having to move assets around from either keeping them on exchanges or moving them to exchanges, the FTX situation would have at least been limited from what actually happened. So one of the key things we're doing and looking at to help clients is around not having to do on-chain movements to exchanges. So firstly, getting assets back into custody where they're in safe, secured, stored vaults offline. And then when we do the trades, we don't have to move them and take that counterparty risk as we move. So what's come on the back of this? Obviously, there's proposed rulings out there, potential changes coming. A lot of clients were following this as guidelines beforehand, but this is really going to put it into cement on these proposed rulings going in place. What you're looking at is potentially what's the definition of a qualified custodian? Banks, certain trusts, companies, SEC broker-dealers, FFIs. You're looking at not just crypto coming into this regulation. It's a regulation for essentially all assets, but it now applies to crypto once it gets ratified and hopefully does go in place to help. And then you've also got what QCs must do to maintain possession and control of customer assets. So we expect to remain a qualified custodian as we're a trust in South Dakota and New York, and we're hoping for this push forward. So clients are now really building to this concept of where it's going to end up, hopefully, and a future state. And that's where the sort of registered investment advisor community is building to the best-in-class structure right now. We've been doing this since 2018 as a regulated custodian, so we think we've got a good roadway into that, and we're building on that. Lastly, I would just say, for clients and for us, the trust element was definitely something that was put under pressure. Clients now look for much more around due diligence, asking questions, wanting to see documentation, wanting to see those audits of SOC 1 Type 2 and SOC 2 Type 2, wanting to see insurance policies. So, not just taking things at face value, but actually doing, the legwork, making sure that that's in place. On the back of all that, what's happened with BitGo is we've seen an increase in flow as clients, are looking for that qualified custodian offering.
Thanks, Steve. So you mentioned BitGo qualified custody since 2018. BitcoinIRA has also been doing this for a long time and is a leader in the IRA investing of digital assets. Maryann, it'd be great to hear how your business developed, how it's fared through a whole bunch of peaks and valleys, and what do you see as the best opportunities going forward?
You know, it's been a very exciting time. In 2016, our founders were already in the self-directed IRA industry, focusing on precious metals, and they proposed this idea of using retirement accounts to invest in cryptocurrency. And luckily, the experiment worked. Bitcoin IRA was formalized in 2018, just as you said, BitGo was. So even back then, we were first partnered with BitGo because of their industry-leading security standards. One of the things I remember about going through due diligence with BitGo at that time, as it was actually quite thorough. They had their SOC 2 license or certificate before most traditional financial industry folks were even familiar. And I think, and we've remained partners with BitGo to today. So I think that's a testament to both companies' stability and their synergy. Now, in 2020, Bitcoin IRA noticed self-directed IRA custodians did not necessarily have the technological tools available to serve their customers as quickly as is necessary to invest in new and emerging markets. So Digital Trust was built to ensure self-directed IRA customers can invest as easily in alternative assets as folks using traditional asset services. For Bitcoin IRA and Digital Trust, this diversification has been helping the group weather the volatility of the cryptocurrency markets. So we are very much excited to move into the future, and you know, our 5-year plus partnership with BitGo is a testament to the strength of both companies and their custody capabilities going forward in the future.
Great, thank you. There's discussion in the market around self-custodying of assets, right? The saying, not your keys, not your coin. I guess, Rick, why isn't holding your own keys a one-size-fits-all solution?
Yeah, and that phrase, not your keys, not your crypto, or not your coins, was pervasive after the events that we saw over the summer of last year. And it becomes you know, a bit of an echo chamber in the Twitter sphere and the crypto ecosystem. But for those new to the crypto space, you know, essentially what that's referring to is this notion that if you aren't in possession of your private keys to access those digital assets on a hardware device or another device, you don't really own the crypto. But here's where that provides somewhat of a disservice to achieving mainstream adoption. Aside from the obvious things that we hear about often, I lost my keys, or I got hacked, or there was a scam, or I pressed the wrong button and I sent it to the wrong address, or perhaps my physical device was compromised before I even received it. Like the horror stories that we hear all the time, which I think we will be overcome, or you know, as people become more familiar with these tools, the adoption curve flushes itself out, and it just becomes more second nature to participating in the digital asset ecosystem. Again, those things will solve themselves out. But the non-obvious situations, aside from the things that I just mentioned, are there are various account structures or investment vehicle types that by mandate must rely upon qualified custody. In particular, IRA assets you know, need to be held within a qualified custody or custodianship. Another example, or non-obvious example, is when it comes to estate or trust or tax planning. You know, a classic story here is I hold crypto on a ledger device and I throw it in a drawer somewhere, and you know, God forbid something happens to me, well, and I don't document or maintain those private keys or seed phrases somewhere that people can access after my departure, that those assets are now gone. And there are ways to mitigate that risk, but you hear about these stories all the time. So at this stage in the development of our ecosystem, we're just not in a place where everyone is either knowledgeable, capable, or even wants to manage their own keys and devices. And that's why it's important that we continue to develop a range of custodial solutions that meet the diverse needs of all market participants, that we don't sort of ridicule people that want to entrust service providers in this space, trusted service providers in this space. Otherwise, we'll never achieve mainstream adoption on the scale that I think we're all hoping for.
Appreciate that. So Steve, what trends does BitGo, when you talk about safety of assets, what trends does BitGo see in securing digital assets?
Yeah, I think there's two things that we've been seeing as trends from clients. The first one is, I put my TradFi hat on again for many years, and I think from 2008, post that situation that happened in the GFC, there was a push for diversification of prime brokers or from banks to hold assets. We've seen the same thing here in qualified custody. The concept of having one provider as a business, and having a BCP, you need those backups to be able to move those assets. The disruption that would occur, if your assets do get locked up from a bankruptcy, can take quite a long time to get those assets released, and that could be obviously impactful for the business. So I think that's been the first thing. People are looking at diversification, and from an asset AUC base, that comes considerably lower than in traditional world, to where people feel they need to have 2 or 3 providers to make sure they've got all bases covered. I think also concentration amongst custodians, like coming into higher quality custodians, making sure that they had all those things that we mentioned before, and sort of choosing the best of the best to make sure they've got the most robust part of it. The other thing I would say, not so much security wise, but more like in terms of product base, I think a lot of times back before FTX, companies tried to do everything themselves. They tried to be everything to everyone. And now there's definitely more of the industry leveraging each other's abilities. No one has everything in their toolkit. So making sure you have that right type of partnership between company to company. So for example, we just launched a partnership on our collateral management business with Genesis. They've got a great derivatives business, and we've got the custody business. So we can sort of work those two things together. So what we've really seen is sort of complementing products across businesses, and on the security side of things, okay, having the best in class, but also diversifying across the
And
members.
Steve, to that point, because I'm sure some of the investors on the call don't understand how BitGo stores and secures the key. Can you talk about how we do that off, cold storage, sharding the keys, and bank vaults? I think that would be helpful, certainly for some of the folks on the call.
Yeah. So, BitGo works on cold storage for their QC offering. You're looking at a 3-key holding here, where 2 of 3 keys are required to sign transactions. Everything is kept offline. The keys are kept in bank grade vaults, which are geographically diverse. There's a client key, a BitGo key that countersigns, and also a backup key. As a custodian, we have the fiduciary duty to hold those keys and keep them safe. And when on the client side, it actually can be sharded up into many pieces, depending on how many approvals are required to actually reconstitute that key together. So to make actual movements out of cold storage, there's multiple people involved across different regions to bring that material together and to make that signing. So, specifically around the BitGo key, it's obviously held in a HSM, which is like a hardware security module specifically built to hold this type of material. So it's really a mixture of cyber, but also physical, to make sure that there are no hacks, there are no breaches. And then we also do a management around sizing of wallets to make sure that limitations on hacks, if that ever occurred, is there. So, and then you have the insurance policy that sits over the top of that. So it gives clients that sort of protection and comfort that they're not in charge of the keys. They're not having to, they're not worried that the key's lost or that something's being mismanaged. That's all on BitGo to do that. So that's kind of how we do it in a very simple update.
And then Adam, if I can tack on to that, because that's sort of the back end custodial pieces. But I think for the benefit of our clients that are listening in, we also provide a bit of operational risk management when it comes to accessing the wallets in assets that we have custody at BitGo, right? That's a separation of roles and responsibilities. That's the assurance that no single individual has the ability to move any assets from those wallets themselves, right? There's maker checker, there's video verifications, there are a number of controls within our own ecosystem that prevent inadvertent access or sending assets to the wrong place or misappropriation of access to BitGo's to wallets that we have assets stored on. So this sort of complementary. So you guys run your business in risk management, and we have our own controls in place as well.
Great, thanks for that, Rick. We could probably spend an hour alone on regulation. I know we brought it up earlier briefly, and it's obviously been in the news a lot, particularly this week with Gary Gensler testifying in front of Congress. So Maryann is the lawyer on the call. What do you think may change going forward, and what is BitcoinIRA looking at from a regulation standpoint?
I think, certainly due to the recent FTX fallout and the current political climate, I think that those events have certainly accelerated the timelines for regulation. That being said, it's hard to predict what type of rules specifically we will see through the summer that might have an effect on BitGo or BitcoinIRA. We've seen, Rick has mentioned it, I think Steve mentioned it as well. We've seen the new definitions of custody come from the SEC. And I do think that we will be likely to see more new rules and enforcement actions coming from those agencies rather than seeing any sweeping legislation from Congress. And I think, unfortunately, with the agencies getting involved, it could lead to governance by litigation. So, for example, with Coinbase or one of the other folks that are facing one of the SEC actions, if they litigate that matter, then we are certainly going to find out what the rules are after that litigation has ended. I'm not 100% sure, I don't think anyone is, that Congress is going to pass substantial legislation this session, except I do believe they may promulgate some rules governing stable coins. I think that's going to be an important issue for this session. Ultimately, I think more clear guidelines and regulations is likely to boost investor confidence and help our crypto industry and then in turn our particular businesses.
Thanks.
Yeah, and then if I could add on to that, so the regulation by enforcement that Maryann sort of alluded to, and then the impending litigation as those as the companies that are being enforced upon sort of fight the assessments of the regulators. Yes, we will seek and hopefully gain clarity. The challenge is the time that it takes to go through the litigation process. And people just have this notion of uncertainty of which way the courts are going to lean. We saw that with XRP. We're seeing that now with Ripple and XRP, and with Coinbase, and they're going to litigate. It doesn't provide a level of comfort to know who's going to win, what side the results are going to fall out on. And it really isn't the best way to regulate the industry. I wish the regulators would come out with specific clarity. If anybody watched the congressional hearings earlier this week, it's clear that it's clear that there isn't clarity, if that makes sense. So
it seems like Congress is learning, right? I mean, Congress is still learning what.
Go ahead.
Yeah. No, please finish.
Yeah, we're all still learning, but the challenge is if Congress is still learning, it doesn't help market participants kind of know what's right and what's wrong. And so people that are doing it the right way and sort of preventing themselves from falling on the wrong side, I think will evolve and continue to be present in the ecosystem. So kudos to BitGo and others that are doing it the right way, and hopefully time will tell what the right rules are and how to follow them.
Yeah, look, I think you make a great point, and if Gary Gensler is in front of Congress and can't answer whether Ethereum is a security or not, right? It certainly leads to uncertainty in the market for sure. So, and we have 5 minutes left. Last question that I would have, and then we'll go to some submitted questions, is what do you see? What are you most looking forward to this year in digital assets? I think we even hitting 30,000 was on Bitcoin, right? We've seen more inbound discussions and client requests over the last week, and I think that was a large number in the market to hit. Maybe we go around, start with Rick, Maryann, and Steve on what you're most looking forward to for the rest of 2023.
Yeah, we too have seen an uptick in inquiry of engagement. The Q1 was a very positive quarter for us. And it is a very much a sentiment-driven market. As people see price appreciation, they gain more comfort and they step back in. But that aside, I guess you asked for what am I looking for? What I'm hoping for is what I would call smart growth. We had the DeFi summer a few years ago. We had the NFT craze a couple years ago. Then we had the I'll call it the incestuous lending and borrowing, opaque, lending that sort of experienced these massive blow-ups. We've had hacks and we've had major deterrents to adoption. What I'm hoping for is that we learn from these. I think Steve mentioned this earlier. We learned the right questions to ask of market participants, of service providers. There was a lot of language coming out of the FTX or the fallout of FTX around proof of reserves and auditability. And like those are learning things. Those are as the ecosystem matures, people learn what to prevent and how to ask the right questions and prevent repeats of the experiences that we've seen in the past. So that's what I'm hoping for, a continuation of that aside from the regulatory clarity.
Great. Maryann?
For me, Adam, I like you said, I'm the lawyer. So I'm very excited to find some of that regulatory clarity that we've been hoping for. And I say hope, but I believe it's coming at least this year. I believe we're going to get more clarity than we've had in the past. And then also as somebody who's been in the industry now individually, and employed by the industry for 5+ years, I actually feel like mass adoption is here in a sense. We're just seeing where it's going to take us. So given that the industry was nascent and now is 5 years in its past, I'm really looking towards more mainstream adoption. So I think the asset is here to stay because I think we've demonstrated that over 5 years, but I would like to see it grow and achieve some kind of stability and a credibility in the industry.
Good.
Yeah, and Adam, from my side, I think before FTX, a lot of you call traditional asset managers or large asset managers were building towards crypto, and it went on hold. Post FTX, we're starting to see that come back, and we hope that continues to grow because they're going to push this industry, the right way, make people do things, hopefully as a standard that they have in their space, and that's going to help drive adoption and this market forward. At the same time, I think like everyone, we just want a little bit of stability in the industry and not have as much volatility as we've been having with constant news flow, and the ability to be able to basically build for the future off a solid base is what I think we're all hoping for, at least getting some type of that this year.
Great. With a minute left, going to some submitted questions. And Rick, this one's probably for you. Actually, both of these are probably for you. How do you move my crypto from one company to the next? And does BitcoinIRA hold investor funds one for one?
So I'll answer the first question, or the second question first. All assets held in custody are backed one-to-one. There is no lending, borrowing of customer assets. That's just not something that we do. And then how do we move crypto assets? So I spoke a little bit about this in terms of the control environment that we operate in, as well as Steve and Adam spoke about their controls. But on the off chance that somebody requests in-kind distributions, or if we need to move assets from a liquidity provider to BitGo to be held in storage, we do so through one, personnel access, right? So we have multiple people that are involved in that process for what I'll call a maker-checker process, validating wallet addresses, doing what we call penny test. So we send a very small amount to the receiving wallet address to ensure that there's no issues with sending those assets. So that's both on the institutional level, so moving between a liquidity provider in our BitGo wallet, but also when sending assets to clients for in-kind distributions, we do that same approach. And then we send the rest once wallets are verified, wallet addresses are verified, and there's no issues. We then send the rest. So it's multifaceted in terms of our approach. It's access driven. It's risk mitigation in terms of how we move small assets at a time, and then there's wallet verification. So hopefully that answers your question.
Great. So we are out of time. I'd say if there are additional questions, feel free to reach out to any of us on LinkedIn or your representative at BitcoinIRA or BitGo. Happy to answer any additional questions. And Rick, Maryann, and Steve, thank you very much for today's session. And I hope everyone that joined found it useful.
Thanks, Adam. Thanks, everyone.
Thank
you.
you.